that's a good tip that you've passed on now. Great investment, but something else for a broader market in corporate South Africa, or managers generally. The Warren Buffett CEO, the book that you wrote on that, was you went and had a look at companies. I think there are over 70 of them now that are wholly owned subsidiaries of Berkshire Hathaway, and saw what made those people running those companies tick.
Yes, I interviewed 20 CEOs who all report directly to Warren Buffett. And they're an interesting control group, Alec, because they don't know one another, because there's no meeting, there's no budgets at Berkshire Hathaway. I'm sure you saw the offices, less than 20 people, although there's 200,000 employees now. Only 20 people are at headquarters. So I went out and I interviewed the president of Geico Auto Insurance, See's Chocolate Candy in California, all spread out throughout the United States. And
very diverse businesses as well.
Yes, everything from corporate jet chairs at NetJets to automotive insurance to vacuum cleaners. What did they all have in common? Well, first, they're all independently wealthy. On average, they're worth $100 million each. Secondly, there is no requirement for them to call Warren, and Warren never calls them. They can call him as often or as little as they want. Thirdly, he gives them free rein. They're in control of their business. Before they sold it to him, they're in control after they sold it. And rather brilliantly, Warren has attracted managers to him who forget that they've sold their business, and Warren has forgotten that they have bought the business. He's a cheerleader. His job is to recognize the Tiger Woods of the world, if golf were a business, I guess it is, to buy Tiger Woods if he were available as one of the world's greatest golfers. And the last thing he would want to do is to tell Tiger Woods how to play golf.
Or how to talk to the investment analysts.
And so his job is to bring Tiger his clubs, to make sure he has all the equipment, all the resources to continue doing what he does.
But Robert, one of the themes that came through strongly there was that the manager of these businesses are so happy to be able to carry on with their business and not having to market it to the investment community. But Buffett doesn't tend to market terribly aggressively himself. He's got that one weekend in May that you spoke about before, but outside of that?
Yes, well, a couple things, Alec. One CEO quantified what it was worth to his time to have once been publicly traded and now a wholly owned subsidiary. He saves 50 days a year, not having to meet with analysts, not having to meet with the media, and not having to raise any kind of capital. Warren Buffett becomes their bank, and he has about $200 million per week flowing in, so they can tap Warren for any kind of capital needs. The second point is Warren doesn't want to attract traders to his stock, so he doesn't advertise. He never, ever recommends the purchase of his stock except one time, and that is on the news of his death. Then he thinks the stock will go down about 20%, maybe 25%. And if it goes up, he says he's going to be very upset.
From up there. His own focus, though, is he likes to buy shares that are well run, well managed. How does he find the Tiger Woods of the corporate world?
He simply reads the annual report, and he lets the character of the CEO speak to him through the CEO's writings. And of course, he's looking for excellent value.
But so, Robert, a lot of CEOs don't write their own annual reports.
Yes, and Warren can tell. If they're written by the marketing or public relations department, Warren can tell. And so he lets their character come through the annual report. If it's a marketing document, he's of course not interested. If they're trying to pump up the price of the stock, he's not interested. He's looking for old economy stocks that are trading at prices that are very attractive. On average, 7 times earnings with a very high return on equity.
My question to Warren Buffett in May this year was, why not invest in South Africa? So much of his money is going to come to Africa after his death because it has been bequeathed to a foundation, the Gates Foundation,
yes,
that puts 50% of its investments into this continent. And he had an interesting response, which was please tell me about companies that are here. If there are any CEOs who are thinking about selling their business to Mr. Buffett, what would they need to be?
Well, I was at that press conference, and I think he also said to you that he was approached by a South African investor who had given him a name and something that he was very interested in taking a look at. But in terms of what CEOs should be, what kinds of companies they should have, Warren looks at 5 criteria. First, they have to have earnings. The more earnings, the more he's interested. And he's looking now at companies that earn about $75 million net annually. So that kind of narrows down and eliminates a lot of the small companies. Secondly, he's looking for high return on equity. The higher the return, the more he's interested. Thirdly, he's looking for little to no debt. He's looking for businesses that throw off cash, not businesses that require cash in order to continue to grow. He's looking for management because, as you know, he doesn't have managers to put into place because there are no divisions, there are no vice presidents. There's not even an acquisition team who's would be charged with going out to buy businesses. And lastly, he's looking for simple businesses. He says if it has too much technology, he could never understand it. And I guess he's also looking for a price. He doesn't want someone to come to him with a business and not have a price on it.
And he would